Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend. I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video. But another thing remember now, another thing you must understand is that even if once you have seen it spotted out a candlestick pattern, allow that candlestick pattern to close completely before you define it. All right, like some people will say, some people will likely see these two candlesticks now, and the third candlestick, they will start saying, oh, it's a morning star. When you're not sure, you have to be sure. And how can you be sure? Allow this third candlestick to close completely and let the new one open before you define it to really be a morning star. Okay, so don't just say, oh, I can see a morning star, let me start buying, when the candlestick has not formed completely, because the bears might likely push it down again completely, and you wouldn't know. It will now turn to a pin bar. So you want to make sure you allow that candlestick pattern to close completely. If it's a bullish engulfing pattern, let the two candlesticks close completely before you define it to be bullish engulfing. Okay, so this one now we can boldly call it a morning star, because the three candlesticks have closed themselves completely and the fourth candlestick has emerged. All right, so now we find price at support. We see bullish candlestick pattern, and then the third candlestick is still on its formation. We don't know what might likely happen, but now we have to wait a bit to see price, because this is another obvious support zone that we were able to create from our 1 hour charts. Okay, and price is still struggling to break out of it. Okay, so we need to be sure. So we want to see price break out of it. We want to see price break out of it so that we can really agree that it's time to buy. So your first anticipation is you want to see something like this happen. You want to see something like this happen, a retest, and then like this, and then you want to say, okay, I will buy, right? That's your first anticipation. Now, if you want to set a plan B, why is always good for you to set plan A and plan B is so that if you are not able to get the first entry right, you should know what to do next to get the next entry right. Okay, so if you are not able to get this first entry, your next plan is you want to see price either move, since price you are able to get that entry, you want to see price hit resistance, come back down again for you. That's your patience. Or you want to see price hit resistance, break out of it, and retest to continue its movement to the upside. All right, so this is you having your plan A and your plan B, and even patience to get your plan C. Okay, so you want to make sure you have all those things in place. Now let us see how we can take our entries and see how price really played in this. So I'll use the replay button and let's see. Just clean this. Pause. Now, what do we see, traders? We can see that finally the bulls really pushed up. Okay, our anticipation has just become through, because we were anticipating to buy, isn't it? We were looking for patterns. So even if you look well, you can see that in between this move, Okay, this was where we saw the, let me zoom it out more. This was where we saw the, what do we call it? I don't seem to understand anything yet. Okay, so this is where we saw an, this is where we saw
A morning star.
the morning star. Yes. So in between this, after this morning star, you know, I told you guys we needed to wait to see what forms next, right? And now in between this, after this forming morning star, what did we see? We saw chart pattern formulate because it has actually gotten into a range. So once there's range, the chart pattern guys will come in to say, hey, what's happening? Why is this market not moving? Come on, this market should move. And you understand the chart patterns are like the bouncers or the police or the road safety. So you don't want to, they don't like go slow, they don't like hold up. So once they see hold up, they come in to ask, what's happening? How dare you delay? You understand? So after this candlestick pattern formulated, the chart patterns came and gave us a double bottom. You can see the double bottom. This is a double bottom. And that's when the bulls now started pushing upside gradually. So you see the effects of all this. All right. You see the effects of your chart patterns and your candlestick patterns working in place, plus your supports and your resistance. So now we see how price have gone to the bullish side. So anyone who must have taken a trade around there from after seeing this pattern and the best push down and they saw this long move. So anyone who took an entry between here to here should have made 21 pips in profits, and depending on your lot size, so you should know what you must have made. Okay, so let's continue from where we stopped. So busy buying, boom. So we can see that if we had taken an entry around here with our supports, support level are being arranged with the patterns we saw, we should have made quite a lot of profits. And this is our take profits, like I told you guys. Okay, your key level should be an area of value. Okay, that's your key level. So you want to take profit there. So the next thing you want to look out for is price going to go down again to support so that I'll buy again, or is price going to struggle its way out of this resistance? Then I'll know my plan B is time to take action. All right. So you see why I told you always make sure you have your plan A and your plan B in place. Because when you have those things in place, once price has gotten to your zone, you don't need someone to tell you what you should do next. All right. So let's see how price played now that it's at resistance. The best pushing down again. The resistance has been touched once, touched second time, touch a third time here, touch a fourth time, and what's happening? Even breaking out, they said, no, 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 push it down, push it down. They're pushing down. At this stage, you don't want to take any funny entry because you don't know what's happening. Now, our channel has just been broken. Okay, our channel has just been broken because this is actually a strong resistance zone that push market deep down. So they have gained enough liquidity to really push, and even to the extent they've broken this channel. Now, what this channel has been a support in the past, all this while, it's been a support. Now, let's see if this channel will suddenly turn to a resistance, then we'll know what next move to make. Let's see, it has actually turned to a resistance. It has pushed market down. At this junction, a trader shouldn't buy or sell anything until you understand the market well. Okay, so since our bias is bullish for the day, we are only looking for buying opportunities. So at this time, you're still out of the markets. You don't want to risk your money unnecessarily, but you still see a lot of traders who will be forcing themselves to sell. Oh, it's going down, let's sell. right? But your bias is bullish. So why not stick to your bias? So let's see what market is doing. Now you see the bulls have pushed up with full strength. Another thing now you must always understand about all this strength, support, and weakness thing is this. When price goes to a certain area or zone, it's actually going there not because it wants to go there. It's actually going there because it wants to gain strength. Or you can say it wants to gain liquidity. Okay? It wants to gain enough liquidity so that it can go and fight the battle with full force. For instance, when you have boxers, Mr. John and Mr. Giants, boxing for 1 good hour, and they finally go and sit down to drink water and refresh themselves so that they can come again. Are they coming again to joke? No, they're coming again to do what? To fight properly so that someone can finally win this battle at last. Isn't that? So when you see price at resistance zone, okay, it means that it means that if it's coming down, it's trying its best to come down with full force to defeat supports. And if you see price, and that's why you now see all those kind of funny breakouts. Okay, now on the while this price is coming to support is actually gaining its own strength and momentum so that it can push up against resistance. So the deeper it comes for support, the better for support, because he's trying to use it to gain enough strength to now push up with full force and break resistance. Now you see how deep it went, even broke through this channel, went here, and now what's happening? The bulls are taking full strength. You can see clearly that the bears are not even showing, there's no red bar at all. It's just the bulls moving in full strength and momentum. And if they continue like this, they might likely break out this resistance if they continue in this movement. Let us see how it played. Okay, the bears now have showed up in full force. The bulls, the bears, the bulls. So it's a range. See why I told you it's not good to stress yourself trading in a range when you see it, especially in your 15-minute time frame. You see the force they use in pushing, boom, boom, boom. You see the force. So this force alone, only one candlestick can swipe a $10 account if you're in a stupid lot size. So you have to be careful. Don't risk your money in a range. Okay? You have to be wise while trading. Now you see, now it's going bullish. You see the candlestick is going using to go bullish, little candlestick. But when you see when it wants to in the side, it moves with full force. Boom, boom. You see a range. You don't want to stress yourself in that range. At this junction, I know a lot of people will be saying, "Oh, it's at support. Let's look for our buying opportunities." But I still advise you don't do anything. If I on a norms, I just advise you just allow price to come out of this zone. You see this zone, it has ranged in this zone for a long time. Don't stress yourself in this zone again. Let price come out of this zone and give you a new move somewhere up or down before you start taking entries again. So I advise as a trader, don't stress yourself in this zone again. This zone is a dead zone. It's a zone for the battle. Is a battlefield. So now price is gradually coming out of that zone. Good. Let me pause it. So price is gradually coming out of that zone. Let's go back to the 1 hour time frame and now see what is happening. Now the bias of the day has actually changed, and the bias of the day has changed. Why? See, we can see a head and shoulder has just formed. Okay, head and shoulder has just formed, and it has changed the bias of the day, which we know for sure that head and shoulder is a bearish pattern. It has formulated. So you see why it is important that as you're analyzing, you're making sure that you're always checking out what is really forming. If you're taking entries from your 5 minute or 1 minute time frame and you're now making mistakes, you're getting losses, you want to stop that loss and go to higher time frame and ask yourself what is really happening. Check out the pattern that has formed in higher time frame so that you can better understand why 1 minute or 5 minute time frame is not giving you good entry levels. Okay, so this is what you have to keep doing as a trader. When you see price in favor, buy from it, make good money. But once price is acting funny from your entry zone, go deep, go back and research from higher time frame. You must see a reason why price is not giving you a good entry levels.